Hypothetically say, you renovate the existing dwelling, potentially using equity that's been created from the growth of the asset 6 to 12 months down the track. This is obviously the clients that have the servicing. We then go back to the bank, refinance all of the growth added to the property out of the property. If you use not a construction facility, but just equity. For a reno, that might be say 100, 150 grand, and it's not actually worth getting a construction loan
of course. The biggest variance between a construction loan and a cash out or an equity release is when the bank gives you an equity release, it's subject to your current position, right? Mm-hmm. So it's subject to the current property value. It's subject to your current serviceability. If the bank gives you 100 grand, you could tell them, I'm going to take 100 grand on your bathroom in, I'm going to put new floors in, whatever it's going to be. The bank can't control that. Once they've given you the 100 grand, it's literally 100 grand in your bank account and you can do whatever the fuck you want with it.
Buy a new Lambo maybe.
Yeah, maybe.
Or a deposit.
Or a deposit. Now, the difference on a construction product is the bank doesn't just give you that, in that example, 250. What they do is they control the funds and they pay the builder as you go. So their exposure to the potential risk of you taking that money to do something else is essentially eliminated. And because they're paying the builder directly, they only release funds in invoices. Every time they then pay, the builder sends an invoice, work is done, and then as then additional work is done, the bank pays, and then additional work is done, the bank pays. Now, when you get to the very end of that 5 stages, the customer then has a granny flat there, and the bank's released the full 250, and that's why they rely on that post value. Because if the bank just gives you 100 grand, and you say, I'm going to go do it, because the bank can't control what you do with that 100 grand, they essentially don't care about what's going to happen in the future, what your current situation is in terms of both value and serviceability.